Well, good afternoon. Happy Friday, June the 11th. Mark Milam here, your mortgage professional with Highland Mortgage, coming to you with this week's interest rate summary and market update. So last week we talked about the shifting narrative from inventory, and that being something that we've been so focused on now for the past couple of months, to really starting to pay attention to inflation. So these inflation numbers starting to come out, starting to be much more of a driver in the market, and that's something we've got to pay attention to. So what happened yesterday was interesting. We got the CPI number. This is the consumer inflation number, and it really is a big factor in terms of what happens with interest rates and mortgages in particular, because mortgages are just long-term bonds, and the higher inflation goes, it erodes the value of a fixed instrument like a bond or a mortgage, and that's bad news for us. So inflation going higher means interest rates are going to have to go higher. So we got a really hot inflation reading yesterday. We expected it to be about 4.7%. Came in at 5%. Let's see what that did to the market. So this is yesterday here, this green day, which would tell you it was a pretty decent day, but you can see this very narrow line underneath this larger green box, and that would show you, let me get down there to it, that would show you that there was a pretty broad range of trading yesterday. Here we saw an immediate sell-off in the morning when this report came out, meaning here we go, inflation's a problem, mortgage-backed securities are tanking, interest rates are heading up, and then we battled back over the course of the day and really actually finished up on the day. A lot of that is speculation that maybe some traders had some short positions that they didn't cover and they needed to come back and make sure that they bought up, and that extra buying up of mortgage-backed securities buoyed us in the short term, but we're kind of paying for it today here. As you can see, here's Friday, June the 11th. We've seen a pretty dramatic sell-off in mortgage-backed securities. Again, this is really in reaction to that inflation data, and it really could have been worse. We got some news out of the EU today that they're going to continue their bond purchase program over there, and that's kind of buoyed us here a little bit, as well as there was a 30-year bond auction today, and that bond auction went particularly well. So that's good news also. So it sort of stopped the bleeding. We didn't see too bad of a sell-off here. As a matter of fact, we're kind of finishing up the week where we started the week. If you go back here around June 7th or so, you can see this is right where we were. So we're sort of finishing out where we started. Not much degradation in pricing throughout the course of the week. Of course, if you have any questions at all, please don't hesitate to reach out. Mark.Milam@highlandmtg.com, 404-395-1102. Have a good weekend.